The Minority Market. Episode 61. Long-Term Thinking, the True Advantage. Most people enter the market with short-term expectations. They want quick profits, fast growth, and immediate validation. This mindset creates emotional decisions and fragile results. The minority thinks differently. They understand that long-term thinking is not slow thinking. It is strategic thinking. It is the ability to delay gratification, remain patient, and build results that compound over time. Long-term thinking starts with changing how you measure success. The majority measures success by daily profit and loss. The minority measures success by consistency, discipline, and system strength. When your focus shifts from today's outcome to long-term behavior, emotional pressure reduces and decision quality improves. Markets reward patience because compounding works silently. Small consistent gains repeated over time outperform dramatic short-term wins, followed by emotional losses. The minority does not chase excitement. They chase sustainability. They are willing to look boring today to become powerful tomorrow. One major problem with short-term thinking is emotional exhaustion. Constant monitoring, frequent trading, and reaction to news create stress and burnout. Long-term thinkers design systems that allow them to step back, observe calmly, and act selectively. This mental space is a competitive advantage. Long-term thinking also protects you from noise. News cycles change daily. Opinions shift hourly. Social media amplifies fear and excitement. The minority learns to filter noise and focus on structure, trends, and core principles. They understand that most information is distraction, not insight. Another key aspect is expectation management. Beginners often expect linear growth. They assume progress will be smooth and predictable. Reality is different. Markets move in waves. There will be slow periods, drawdowns, and stagnation phases. The minority accepts this reality and remains committed through discomfort. Long-term thinkers focus on building skills instead of chasing outcomes. They invest time in understanding behavior, improving discipline, and refining systems. These skills compound just like money. Over time, experience becomes an invisible advantage that cannot be copied easily. Another important habit is delayed gratification. The minority resists the urge to take profits too early out of fear. They allow good positions to develop. They let trends mature. This patience creates asymmetric results, where winners grow larger than losers. This imbalance is the foundation of long-term success. Long-term thinking also improves risk management. When you think in years instead of days, you naturally become more cautious with capital. You avoid unnecessary risks. You focus on survival first. Protecting capital allows you to stay in the game long enough to benefit from compounding. The majority often abandons plans after temporary setbacks. The minority stays committed to structured processes. They understand that setbacks are part of the journey. Instead of reacting emotionally, they review mistakes, adjust behavior, and continue forward. Another powerful shift happens when you stop trying to be right all the time. Long-term thinkers accept uncertainty. They focus on probability and process instead of prediction. This mindset reduces ego involvement and improves emotional stability. Long-term thinking also affects how you choose opportunities. Instead of chasing every movement, the minority selects high-quality setups aligned with strategy. They are willing to wait weeks or months for the right conditions. Waiting becomes productive instead of frustrating. One simple exercise to build long-term perspective is asking this question before every major decision. Will this action still make sense 6 months from now? This question filters impulsive behavior and encourages thoughtful planning. Another practice is tracking progress quarterly instead of daily. Review your discipline, rule following, emotional control, and consistency. This longer evaluation window reveals real improvement and reduces emotional reactions to short-term fluctuations. Long-term thinking does not mean ignoring short-term risks. It means managing them intelligently while keeping the bigger picture in focus. The minority balances present action with future vision. Markets reward those who can stay calm while others panic, Remain patient while others rush, and stay disciplined while others react emotionally. This calm strength is built through long-term thinking. Over time, long-term thinkers develop confidence rooted in experience, not luck. Their confidence is quiet, stable, and resilient. They do not need constant validation because they trust their process. Remember, wealth in markets is rarely created by one decision. It is created by thousands of small disciplined actions repeated consistently. This repetition is only possible when you adopt a long-term mindset. If you truly want to become part of the minority, stop chasing speed. Start building durability. Stop reacting to daily noise. Start focusing on steady progress. This shift will change not only your market results, but also your emotional relationship with money and risk. Long-term thinking is not glamorous. It does not produce instant excitement, but it produces something far more valuable: stability, clarity, and sustainable growth. That is the true advantage the minority carries quietly while others burn out chasing short-term rewards.